If you're one of the many people that thinks auto insurance is a scam, I'm an insurance agent, and I'm going to go over all of the questions that people have and objections and the reasons why people feel it's a scam, so that way you can hopefully understand a little bit.
Car insurance is the biggest scam in America. How did car insurance become the law?
When it first started was in 1927. Massachusetts was the first state to make it mandatory. And a lot of other states started adopting that all the way into the 70s, where that was every state. And it was all to deal with this one problem. What happens when a person drives a car, but they don't have any assets, no money, they don't own anything, and then they do hundreds of thousands of dollars in damage to someone else? How do you pay for that? How do you make that person whole? So instead of doing some sort of socialized thing or some other program, the idea was if everyone is required to have insurance, then at least there is some sort of policy that will pay to make that person whole, instead of having, thousands, hundreds of thousands of citizens that get damaged by people with no way to recover.
And how is it okay that the insurance costs more than the monthly payment for the...
Yeah, this is a recent problem that never used to be this way. There's a whole bunch of reasons, and I've done dozens of videos on why insurance is costing a lot more. But yeah, it kind of sucks, and it never used to be this way.
If I haven't been in a car accident in ever, why can't I get my money back if I've proven that I'm a good driver?
Because it's actually not about you only as a driver. Insurance companies only understand you as a group of peers together. Because how auto insurance works is that all of the drivers are dumping all of their money into this pot. The insurance company manages this pot of money and then pays out all the claims for all the drivers. So even though you've never had a claim, you're paying for somebody else that had a really bad claim that year. And the idea is that if you ever have that situation, then you can draw from the pot of money. So you understand it's never going to be, it's not an investment. It's not something that grows over time specifically just for you, because honestly, if insurance was designed that way, it would often not work. Because what would happen, for the 16-year-old kid that got their license, got insurance, and 3 months later they totaled the car, they wouldn't have built up enough money to pay for their claim. That's why it has to be a community thing where everyone's pooling their money together and everyone's drawing from it at different times in case they need it.
Why am I being punished for how other drivers drive?
As I said, it's not about you, and insurance companies can only understand you as a part of a peer group. And there is actually some government regulation that forces them to do that. There's something that insurance companies are trying to do more and more is client segmentation, understand more of a narrower group of people. But that starts to get close to discrimination. So that's something that is a bit of a difficulty, because you're right. If the very best drivers were in their own premium group, in their own rating group, they would get better deals. But the problem is that the only way to separate people is by all kinds of different data points. And a lot of insurance commissioners in a lot of states have said, no, you can't separate these very specifically, awesome, amazing drivers, because the ways that you're doing it is discriminatory against someone else.
And why is my car insurance rate depending on my credit? What does my finances and my credit have to do with driving?
A lot of people won't believe me when I say this, but I've heard this from multiple different insurance company executives that credit utilization, how much of your accessible credit that you are using that's leveraged currently, is their best predictor at future loss. Because they're trying to figure out, hey, who is the person that's going to play bumper cars? Who's the person that's going to get in lots of accidents? Because we need to charge that person more, so that way the people that do drive well get charged less. So they're obsessed with figuring out future loss, and they have found that people that, take out lots of loans, max out their credit cards, that they are living a more risky lifestyle, and they will take chances. Because, think of it. They're taking a chance with their financial future. Instead of paying for cash for the thing that I have right now, I don't have it yet now, but I'll have it later, and I'll just take out a bunch of credit cards on this purchase. That is a more risky person, and they will make more risky decisions, like driving after a couple beers, like driving a bit faster, like, I think I can make that light, than a person that's like, I'm going to wait until I have cash on hand to pay for this, and I'm not going to max out my credit card. So that's what it is. It's not anything else. It's just credit utilization, and insurance companies all over the place have consistently said it is the best thing that they can find that predicts the person that is more likely to be risky.